Next up, charitable contributions. We'll be seeing this a lot throughout the exam, so make sure you take note. Charitable contributions deduction allows a C Corp to deduct contributions made to a qualified charitable organization. The deduction is generally limited to 10% of the corporation's taxable income before considering the NOL, charitable contributions, and DRD. Couple of points. One, making sure you know the difference, how these are treated on corporations versus everything else, because what is everything else? Well, it's individuals. Even if a S Corp or partnership makes charitable contributions, those deductions will flow through to the individual and then they'll be itemized. So we know that charitable contributions are itemized in everything else. For corporations, they are limited to 10%. Also, memorizing, and we'll practice this, it doesn't hurt to look at the tax forms as well. You'll see that charitable contributions are considered before NOLs, all these other things. So it's the taxable income before taking that into account. So, another thing, you can't deduct charitable contributions and then take 10% of what's after that. Nope, it's going to be before any of these items. If a corporation has a negative taxable income before considering these items, the charitable contributions deduction will not be utilized in the current year. We'll see a lot of these items you cannot use to create losses. However, any unused charitable contributions can be carried forward up to 5 years. Lots of sims will have you be doing roll forward schedules, carrying forward, carrying back, deductions, credits, losses, all that good stuff. Get ready for it. We'll prepare you well. All right, let's see some examples here. First off, we've got corporation with positive taxable income. We've got taxable income before those items of $100,000. We have $15,000 in charitable contributions. So doing a little simple math here, we can deduct up to 10%. That's the rule. And 10% of our income before those items is $100,000, is $10,000. So we can take $10,000 of the $15,000 in the current year. However, we've got $5,000 left that we cannot take this year. So that remaining $5,000 can be carried forward for up to 5 years. Awesome, nothing too wild. That's the accounting treatment we'll see. Next up, corporation with negative taxable income. Let's say that before considering any of these items, we've got negative $20,000 of taxable income, and then charitable contributions of $10,000. Well, unfortunately, I hate to say it, but since the corporation has a negative taxable income, before considering NOL, charitable contributions, and DRD, the charitable contributions deduction will not be utilized in the current year. The entire $10,000 can be carried forward for up to 5 years. Nothing too crazy. This will be incorporated into Sims. We'll see this with other topics, but in and of itself, not too difficult. Next up, we've got corporation with positive taxable income and carry forward. We've got taxable income before those items of $50,000. We've got charitable contributions in the current year of $3,000. And let's say we have $7,000 of charitable contributions that were carried forward from previous years. Now, in this example, the corporation, as they always can deduct up to 10% of its taxable income before considering those items we see, which is $5,000. That's 10% of the 50. Since the corporation has $3,000 in current year charitable contributions and a carried forward of $7,000, we can use the entire $5,000 limit for deductions. So we'll take up to $5,000, and then we are going to have $2,000 of the $7,000 we can use, leaving $5,000 of unused charitable contributions remaining. That will then be carried forward. So first, we're going to use the $3,000. So that gives us $2,000 to use. We'll use $2,000 from here. That gives us $5,000. That is reflected here. That gets carried forward into future years. And that is just another great example. Nothing too crazy here. Just keep knocking them out, running through, making sure you can take this down in any format you see on the exam. All right, here's a corporation with positive taxable income and an expiring carried forward. Well, we've got taxable income of $80,000. We've got current year charitable contributions of $6,000, and then charitable contributions carried forward from 5 years ago of $9,000. Now, in this example, we can deduct, as we can always, 10%. 10% of 80 gives you $8,000. So first, we're gonna totally take our $6,000, right? We got $6,000 in current charitable contributions and a carry forward of $9,000 from 5 years ago. That's about to expire. We'll use as much as we can of it, but unfortunately, other than the $2,000 to get up to the $8,000, that is going to expire. It's gone forever. You hate to see it, but at least hopefully it went to a good charity. That's all I can say. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning.
Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.